Okay, so the U.S.-Canada is on right now. I'm not going to read the report for you. This is called this level 1.5. So what I'm going to do is look at these symbols on the long side and then on the short side. Each one of them came from a reading of the report. So if you started with that list in your hand, one of the things you could do is, as you go through the report yourself this weekend, say, now why did he see that? Why did he flag that particular symbol? And why was it long or short? So these are going to be the swing trades that I managed this week. I'm just going to work off that list, and then I'll take a look at them for the next weekend report. All right, so the first one, Goldman Sachs. This was a 5-to-1 auto framer. I'll just give you the hint on that one. I'm just being nice, I guess. So what happens here is you have this tiny little doji, and so the risk line is there. The 10-day high is approximately over here. So that's the trade frame, and you have such a tiny little doji in there that this thing is a no-brainer. So this is how I frame that trade. If it fails, I'm going short. If it breaks out, I'm going long. This is my expectation up here. I really extend it from the dragon over, and then I'm looking at Z plus 2, Z plus 2.5, or no, that's Z plus 1, 2, and Z3. That's the Z3 ladder right there, and that doji is so small. That's what makes this a really attractive symbol. You'll see this one on the in the Dow 30 report for the ETF2. This was a brand new symbol in the red. We had a white on the 10-day or on the 10-week consistency, but was horrible on the strength. And this big sell-off is just painful. But this could be a swing low. It's had a little bit of performance here, and it ends in a doji, so that's a perfect critical state down there around Z minus 1. So this is really a Z trade and a ready, fire, aim trade. So that's my standard framing technique, or the indicators on stock charts, but I actually prefer the chart style on free stock charts a little better. I just think it's prettier. All right, so this one is, let's see what we got here. This should be ExxonMobil. No, I'm sorry, American Express. Okay, so I really like this one. This is an RLXD entry. If this was intraday, you could see the morning hook. Here's our little, I don't know if that's quite a bottoming tail, but we get 2 dots at least on the RL, or on the PSAR. The dragon has gone from steep down to almost flat. The RL10 has made a double bottom. We've had 5 days up in a row. I love this one on a continuation of upward momentum. So I would buy this one 5 cents above. I put a stop below the dragon. I'm looking for the Bollinger Band mean. Far side of the river, RL270, Z plus 3. If it failed below the dragon, I would auto short this one. And then if it broke to a new swing low, I would add a second position in here. So this is my bread and butter. This one is ExxonMobil. This one moved to the top of the Dow 30 report, and what we have is, a rebound in the energy sector. And this one may already have gotten ahead of itself, but it's got like a quadruple bottom in here. It bounced hard off that RL270, and now the river has gone from down to flat to starting to hook up. That's favorable. The RL30 has crossed the 30-period Bollinger Band and is up. This was the beginning of trending behavior right about here. And so this one looks reasonable to me. If it takes out 83.40, off it goes. I would look at, there are some, the next resistance levels are way over here, so it can get to 88 or 89 pretty easily. So if I can buy it here with the risk there, there's my 1, 2, 3 on the upside. If it were to fail from here, if the whole energy sector were failing, then my target would be back to here, and I think that's tradable. I think there's 3 units of reward in there for a tight stop. But I might want to do that with USO or XLE, but XOM has been benefiting from this bounce off the bottom. And I think if I go back over here to the dragon, the tell, if you will, was this. I like to extend this line straight across, and this was the last sideways chunk right around the RL270. So this is that sideways quiet chop in here. And now you can see we've got a measurably different statement of purpose and intent right there. So I like ExxonMobil right there. The truth changed in energy. Even that RL90 is going up. The 270 is pointing up. The dragon is up. The 30 is up. The river is up. That's a 10-day improvement in the energy sector. Oh, ExxonMobil again, sorry. All right, so this is Procter & Gamble. Now, this is one that I have already got some swing trading context on, so I'm already into a sequence on this one. This was a double bottom. This was the last measured move. It came down here and gave me this Z minus 2.5. I bought the RLXD here. Got this exit. It was a much better trade, and I let a lot of this get away. It was slow, so it almost bottom ticked me here. And then my re-entry was a 1, 2, 3 re-entry. Now you'll notice that the RL10 never left the dragon. In my optimistic mind, maybe I could have said, well, why I didn't have to get out here. Yes, I did, because I was worried about it doing this. It was failing right where it's supposed to fail, and the last time it did, it came all the way back down to where my entry was. So I was willing to give up that much in order to lock in that move. But then it didn't fail further. I got a 1, 2, 3 entry, and now the RL10 has left the dragon again. And I'm watching this one carefully. My stop is here at the dot at 80.80. And if it gets above 82.80, then I feel really good about this one. And then I think that this size of this move will be the size of the next move. So I think it can get to 85. So that's a continuation on Procter & Gamble using the RLXD. McDonald's is one of those top 5 winners. It has pulled back to a perfect location to me. This last little gain right here has now pulled back, and in that time the RL270 has caught up, and this is where you would now expect it to find support if that upward trend and those conservative money managers are still going to hold it. It should look like this. That support region should hold, if this hypothesis of the upward move were to hold, right? So that makes this a really nice place to buy, because now my target can be this 10-day high at 124, and now I'm buying it around 117, and so I have this, and then my risk is probably like this. So maybe $2, and then with the possibility of 9. So I like that move. I will buy it 5 cents above, and off it goes. If it fails here, then my expectation is that the size, I don't want to short McDonald's because it's been a really strong one, but if I were a McDonald's specialist, here's how I would frame that using the RLFF strategy. I would measure this distance from the RL270 to the maximum excursion on the RL10 and say that's how far the traders can push it away from fair value. So if they all disappear and get burned, then, and that's what it looks like here, see how they got burned that same distance, came all the way back, and then extend that the same distance down. Now if it fails, how far could it fail with traders pushing it the other way, all the way down to 106 or 107? So that's, if this thing fails, this is the price target, because it's going to blow right through that double bottom. So that's how I frame the trade on the other side. This is a perfect place to buy right here. This is a perfect place to short right there. And then my first target is here. Second target is there on the downside. On the upside, my target is here. And that's my risk in the middle. So I like that one. Next one, this is Coca-Cola. I looked like I was drunk when I drew this one up, but I already have some context on this one. This was that distance on the RLFF, came all the way back, found support down here at the 270. I bought the RLXD here. I'm still in that trade. As long as the 270, if the 270 had failed, I would have cashed out for a fractional. At this point right here, I'm looking at it testing this previous swing high. If it gets through there and keeps going, then I feel I'm going to add a second position, and I have my stop right here right now. So that's where I am in that trade. So I like Coca-Cola. If I didn't have this position already, I would still buy this with the stop probably right about here. This one is in Walmart. This one's a little trickier to see, I think. We have this RLFF. It pulled back only halfway, found support at the Bollinger Band mean, made another leg of the same size, this move, pulled back halfway. Now that this little anomaly, it's right back at the Bollinger Band mean, which is where it lasted the last time. And so the last time it hit the Bollinger Band mean, it did this. So I think if it takes off, it can do this and go that high. If it fails from here, then I think, the move is back to the RL270. And that comes in two stages, here and then here. So this is a nice critical state for Coca-Cola. I like the fact that it had a higher low and finished very well. So I'll continue to buy momentum here, and I'll put my stop right here. And if that fails, I'm short, then that's my first target. Second target at the Z3, Z-3, and then third target down here at the RL270. But I kind of like the fact that everything crossed over the RL270 here, and now it's got this long and strong move. And here's 1, 2, and I'm betting on the potential for a third leg of that magnitude. Yep. McDonald's ATR of 2.25 or 2.5. Yep. Treasuries, I've got some context on this one. I bet some of that on Friday. So I had the RLCO or the RLXD continuation pattern. So here was the first one. I missed that. And then it made its move, came back to the dragon. The RL10 was taking off again. So I buy this here. That's one. I cash this one. It gives me a 1, 2, 3 entry. And so I'm back into that one. That's the re-entry for the second trade right here. So this was in the bank. Then got the 1, 2, 3. And again, the reason I take this one is because it was already a good trade and I gave a lot of it back. And I wanted to protect the move to come back to the entry where I scratched. So I wanted to cash and get paid. And so now I'm long on this one. My stop is underneath here. And then if we get some weakness, like if the bear resumes, then that treasury play is going to go well. And there's still a lot of people cycling into treasuries. As you can tell, the RL270 was sloping downward and is now sloping upward. So it's starting a long-term regime of flight to quality, probably for the rest of the year, because it's such a revolutionary presidential year, and the implications of Sanders versus Trump on the economy could be extraordinary. So that's making treasuries sound better each and every day, especially with Europe showing no signs of being able to manage the exodus of all the Middle Easterners. Next one up, Microsoft. I'm already into this trade right now. It was one of the top 5 in the Dow, so on the ETF2 or the BMR report. So this one was an RLXD type of entry here after a Z2, and then a RLFF at maximum excursion. So this was my entry. This is my stop. This is still my stop. We'll see what it looks like from here. If it gets above the RL270, that's where I will get up to no lose plus dinner for 2. So we'll see how that one goes. That one's still a work in progress. I wouldn't buy this one now. Maybe if you did this, if this fails, it comes back to here. If this takes off from here, I think it goes to there. So you could consider whether or not you wanted to buy it here. Not the best setup, but that's what it is. I like this with Apple. The only issue on Apple right now is, are they going to keep acting stupid about that terrorist's phone and playing hardball? I just don't get it. They're going to cut off their nose to spite their face. But what I like is you've got this long bottoming, that the half of the cup. So there's the cup, and now it's at the bottom. And we've got an RLXD right here. I'm ready to buy it on momentum at 97.50. Initial target here at the RL270, and then up here at where the dragon failed. So there's plenty of upside on this one. And it's had 20 days to fail, and it has not failed further. And everybody has to own Apple, and you're buying it on sale. I'm talking myself right into this one. But if it fails below that line, I'm piling on. Those rat bastards that need to play ball with the feds. Next is Dow. I did this one. I know Sonal likes Dow, so this one's for her. And this has basically the same. Oh no, that's Apple. Sorry, Dow. Here was the RLXD entry, which I missed. It has come back and held support at the edge of the dragon, and it started to take off again and finding support at the 270 where it belongs. So now I say the distance maximum excursion from the 270 to the 10 was this far, and so it can go that far on the excursion to the upside. And so here's the hump of the dragon back there. So those are my 2 price targets for trade framing. I'll buy this here. I'm looking for the Z3 move, then the retest of the monthly high, it goes there. If it fails below the dragon, then I think it comes down to this hump of the dragon, and I'll go short there. IWM, so this is the weakest of the 10 regionals, along with Latin America. Here's kind of that double bottom. We have the RL10, so I'm ready to hold my nose and buy this one at the green line with the target of the RL270, and then this last hump of the dragon. I will short it if it falls out of the dragon. First target is 94, and if it falls through there, I'll add a second position. Katie barred the door. That's the catastrophic failure option. So I really like IWM in that region. Here's ILF, essentially the same thing as IWM. You know, here the big fail, the dragon turned, the RL10 crossover came back, held support at the dragon, and is now taking off again. So I'll buy it at the green line with a stop at the red line. My target is here, back to this cluster. If it fails, I'll go short. If it fails below 1850, I'll add a second position. If it goes below 17.25, I'll add a third position. That's easy to believe in the weakness. The previous pivot high at 21. Well, because if it gets through the green line, it's just going to go. And this just was just a spot that it got to before. I mean, that was a 1 day 50-cent little splurge, and I'm so close to that. If I wait to get above 21.25, I'm going to give up 50 cents. So let me just buy it. And if it gets up there and hesitates, I'll cash it intraday. But I don't mind buying that one that close. On the swing trade, that's not as important to me. Your mileage may vary. Brazil looks even better than ILF and IWM on this one in terms of the long side. Anyway, so I have been shorting EWZ. This was an RLXD failure. The RL10 tried and it couldn't cross the dragon. Came out, made a new low, so I'm short. Failed again. That's the second RLXD position short. Cashing them all here. I didn't stop and reverse because I would rather go long something strong. And so now what it's done is had some sideways motion in this circle, and now it's ended up right here. With the RL10 has stayed in the dragon, is getting ready to go. So I'll buy the green line. I'll short the red line. Each one is a stop for the other. If it gets through this little hump at 21.30, then I think it goes up to 24.90 or 25. That's where I would add a second position up in here. So this will all be, that would be one good trade on one scoop right there. AXP, I think I showed this one on the other, using the stock charts version. I think it's prettier in free stock charts. I like the styles and the color combinations better. I like that the RLXD, as we saw on the other one, the 10 has made a double bottom in here. The RLXD has crossed the dragon. It's crossed the 90. I've got room at the to close the gap here and here. The RL270 is there, so there's enough upside to get it. And then if it fails through the red, then I would add I would get short at the red line, add a second position here at the stick purple line. So that one's straightforward. And I think, Disney. Disney's the last one. I like the RLXD. This was a Z minus 2.5. I'm ready to buy this one right here with a stop right here. If it fails, I go short. If it fails below here, I add a second position. This is where I go long. I'll add a second position if it gets above the RL 270. This distance here is what I think is the maximum distance on the upside. And that's why I would add a second position, hoping I could get it up to 121. Okay? So what we just did here was I did about 15 symbols that came out of this weekend's report for the swing week ahead. I've identified some things where I want to go long, ones where I could actually go short. I would prefer to go short, but many of these were structured in such a way that I saw the ability to go long of them too, because in my view, you get the combination of recovery and the value play on these big fat ETFs and the Dow 30s, and so I'm almost acting like an early adopter there. So I tried to frame each trade looking in both directions and targeting prices on both sides of the trade as a standard practice. What I want you to do now is go back through the weekend report, analyze those indicators, listen for the themes, figure out what made me look at that list of targets. What was the justification for narrowing on those? I've just done my preparation for these and built my trade frames, and that's what I'm going to look at for swing trading this week. Okay, so there you go. I'll get this whole thing recorded and posted for you here shortly, and we'll look forward to the week ahead in the chat room, and keep working hard. You guys are doing great. The crosstalk on the message boards are excellent. So pending your final questions, that's all I have for you tonight. Thanks for hanging in there.